Think beyond traditional business banking. Think a partner that gives you in-depth financial insights.
Minutes to 1 p.m. is your time. You're watching Powerline Southern Africa, and it is time for the Power Table. And it's a different Power Table today. We are going to Dubai, where my colleague Fifi Peters is mixing it up with Global Big Hitter. So this year, it's the Dubai Business Forum, and the theme this year is Shifting Economic Power, Dubai and the Future of Global Trade. And with that in mind, Fifi spoke to Jean-Claude Trichet, the former president of the European Central Bank. Let's listen in.
We have a lot of threats, a lot of very demanding elements in the global economy at the present moment. I will mention, of course, here the green transition, which is so important, which has been accepted as one of the major issues for all our countries, all our continents. And I take it that it is a symbol that COP28 will take place here in the Emirates, in the United Arab Emirates. We have inflation, which is still there. I am reasonably confident that the central banks will combat successfully inflation. But it is a problem that was highly unexpected, obviously, to the extent that some observers, market participants, and even authorities thought that it would be transitory when it was sustainable. And we have, of course, the geostrategic tensions that are taking place in Europe with a war, in the Middle East, where we are, with terrible tensions. And in Asia also with the quarrel between the United States and China. So the world is very different from what it were before, and you're absolutely right to mention that. And I think that it calls all of us to be vigilant, to be as resilient as possible, and to strive for peace without, taking any second of rest.
Sure.
We have to strive for peace.
Sure. On the issue of inflation and the reasonable confidence that you have in central bankers to eventually tame it and bring it down, today is an important day. We're waiting for the U.S. Federal Reserve to make its latest call on interest rates. I'd just like your thoughts on at what cost. Central banks, the confidence that you have in their ability to bring inflation down, what cost will that come with? Because a lot of people are talking about the prospects of recession and the likelihood of lower inflation, meaning recession in economies. Do you think it is as simple of a trade-off as most people are talking about?
I think that what counts, of course, is to win against inflation, to re-establish price stability. And we have a joint definition of price stability around 2% in the medium run. Now, what is extremely important, if you lose control of inflation, we know what happens, because it happened after the first oil shock and second oil shock in the 70s and beginning of the 80s. We could see inflation galloping at 14% in major economies. The control of inflation back again was made by Paul Volcker, the chair of the Federal Reserve. Interest rates were at 20%. So now we have 5% in the US, 4% in Europe, more or less. So you see, it's not 20. And of course, the cost to be paid if you lose control of inflation is gigantic. So I will not compare the cost to be paid by our fellow citizens in all countries, by economy, by the poorest and the most vulnerable of our fellow citizens. I will not compare what we will have now as far as drawbacks associated with the increase of rates with what we had to pay at the period I am mentioning after this first and second oil shock. So all taken into account, I am confident that, reasonably confident, of course, sure. Nobody is the master of the future, reasonably confident that the central banks will regain control of inflation and that the cost for, again, our fellow citizens will be minimized. And let's not forget, inflation is an imposition of the poorest and the most vulnerable of our fellow citizens.
And so, what do you make of how the situation around inflation was managed? Of course, what gave rise to it initially was the COVID-19 pandemic, which was met by other supply chain shocks. The recent war and geopolitics that's also added to pricing pressures. And what we did see is the central banks increasing in interest rates at rates and at quantums that haven't been seen in the recent while. Do you think they went about it the right way?
I think you mentioned two of the structural cause of inflation and also an immediate trigger, which was the post-COVID recovery. You mentioned that. I fully agree with you. I fully agree with the fact that we have on top of that elements that are probably calling for a higher push for inflation in the future, structural. We have the so-called long global value chain that are put into question because of the war in Europe, because the tensions of all kinds, calling for friendshoring, reshoring, which of course are pushing price up because you don't take advantage as we did before of the full division of labor at the global level. You have also the green transition, which is also something which has a cost and has to be done in any case, but has a cost and also can create some push up for inflation. You have also the inequalities. Inequalities were neglected in the past years at a period of very low inflation, and the price was to be paid by the unskilled worker that had no augmentation at all of their remuneration. So now it is recognized that inequalities in all countries, in all economies, are not acceptable to the extent that they were. It was the case before, and that is also pushing a little bit up inflation in comparison with the period going from Lehman Brothers up to the COVID. You see, we had a period of very low inflation. So all this creates a world which is, from that standpoint, more demanding than before. But I trust the central banks. Central banks have to deliver price stability. It is their duty. Even the European central banks, it is in the treaty. For the US, as you know, the US decided to give flesh to its mandate to deliver price stability in saying price stability is around 2% in the medium term. So we have a consensus on that, and I am reasonably confident that we will gain or regain price stability.
Sure. I'm glad that you mentioned the issues around friendshoring and reshoring. The conference is focused on the shift in the global paradigm and the rise of the global south in wanting a reconstruction of the architecture to make it a lot more inclusive and fair. What are your thoughts on what is happening with the global south right now? The expansion of BRICS, the inclusion of the African Union in the G7. Just your thoughts on the reshaping of the global architecture and what the potential impact or ramifications could be thereof.
We are in a world which is changing so rapidly. The GDP of the advanced economy is progressively shrinking, which is good because it means that the other countries are catching up. And we are observing that everywhere. Of course, UAE is a case in point, sure, as well as mainland China, as well as India and Africa. So clearly, the world is changing. What I hope is that we will not divide the world in two. I don't see any sense in a battle between the G20 on the one hand, with Africa now being very, I would say, well represented in the G20. And the BRICS, on the other hand, I mean, the enlarged BRICS is a club, but I don't see a battle between the BRICS on the one hand and the G20 on the other hand. We are on a single planet. We are in a single world. And that single planet is also our single spaceship. We have no other spaceship. And we have to care for the spaceship in question. So So I remain reasonably optimistic on our capacity to remain united, even if I have to admit that the present world is very, very demanding, obviously.
Sticking to the BRICS countries, right now there has been talks of BRICS currency as trade partners are looking to reduce the cost of trade and as there is a move towards de-dollarization. Just reflecting on your time at the European Central Bank and navigating implementation of the euro amongst different countries with different flavors and different cultures, what are your thoughts around the BRICS currency and perhaps lessons that can be shared?
Well, we will see what happens. I consider at the present moment the BRICS as a club, and as a club where a lot of people are anxious to get in,
Sure.
including the UAE. We are speaking in a country, Dubai, Abu Dhabi, which is a member of the BRICS, with many others. I don't feel that they could embark on create a single currency that would be the single currency of the BRICS. I see a club. I see a club where you exchange views totally freely, but you also are member of the G20.
Sure.
You also are member of other clubs, I mean, I see if it helps a much better communication between all part and parcel of the world, it's good. If it is creating a divide, and if the planet is divided in two, it would really be dramatic. And certainly, seen from here, seen from the United Arab Emirates, it would be really dramatic if there is a world which is segmented, dramatically segmented. So again, I see that we are experiencing changes of first magnitude. I don't see the world dividing itself and quarreling itself dramatically, because it's not in the interest of anybody.
Finally,
And I responded already to your question on the currency.
for sure,
Yeah.
for sure. On the issue on COP, as we wrap up, you mentioned the fact that Dubai will be hosting COP 28 in just a few weeks. And the issue around climate right now is who foots the bill? Developing countries are saying that we are responsible for the least emissions out there, yet we are experiencing the greatest impact. Developed countries, to an extent, have acknowledged that. They've tried to play their part, but there's still a missing amount, a significant amount, to finance climate change to the way that will make the global ecosystem a lot more resilient. In your view, who foots the bill?
Well, first of all, you're absolutely right. Your summing up of the situation is absolutely right. The advanced economy, and we understand that it was because they were the first to embark on industrialization and rapid development, were the polluter, the first polluter. That's absolutely clear. Now we have a single spaceship. So everybody has to care for the single spaceship. I agree that the more advanced economy and the wealthiest economy have to help the other economies, including emerging economies, to catch up not only for prosperity and for GDP per capita, but also catch up for caring for the planet. So one very poor observation was that the promise for the $100 billion was not honored. And that is really a pity. And of course, it's a symbol of the absolute necessity for the wealthiest in the world to help those who are less wealthy in order, again, for all our spaceship to be properly cared for.
So you're listening there to Jean-Claude Trichet, the former ECB president, speaking to Fifi Peters, who is conducting the power table from Dubai today, where some of the finest minds in the world in the financial sector are debating ways of doing business. There's apparently also an opening of the Museum for the Future in Dubai's financial district, where they are trying to look into the future of Dubai and what it might look like. It just makes you wonder as well what you can do when you have got the resources. You look at where the money is coming from for Dubai, obviously oil, and then you look at where our money here in Africa, Angola, I cry for you, Nigeria, I cry for you. Where is that money going? We're not building for the future. Fifi also got a chance to speak to Premeshin Naidu, Managing Director for the Middle East and Asia at Absa Bank, to speak to him about some of the issues that he's seeing being addressed at the summit.
I think it's really exciting what is happening in Dubai in terms of their growth strategy, in terms of the development that we've seen over the last few decades and how the city has been able to transform itself. I think one of the standouts is that Dubai has been a city of vision, and it's been supported by the capital base that they have. And certainly in terms of the many conversations that we've been having with the likes of Dubai Chambers and some of the other businesses that are present here in Dubai, Africa is a key agenda point in terms of future growth opportunities, particularly given the demographics in Africa, the need for infrastructure, and the opportunity to essentially help to transform the continent. So these are all items that businesses in Dubai are thinking about, but certainly Dubai as a government as well is quite focused on. I understand that Dubai Chambers has increased their number of offices present in Africa, and I think that then talks to the fact that Africa is seen as an incredibly important and large growth opportunity for businesses that are based here in Dubai.
Sure. As a Pan-African lender, though, where's the money going to the most in the continent from this part of the world?
Look, it's across a number of sectors, right? So there's certainly a big theme in terms of the demographics of Africa. Consumer goods and services, an area of huge interest. Commodities, both in terms of mining and metals as well as agri-commodities. So for example, Dubai has created the mechanisms through areas like the DMCC and as well as the financial hub that Dubai has become to finance and trade commodities as it relates to Africa, both in terms of imports and exports.
What about geographies, as in if you just look at the kind of deals that you're either potentially looking to bed down or you are helping to bed down in terms of the east of the continent, the west, or even the south? Which regions in the continent would you say is attracting the most attention, or would you say it's across the board?
It really is across the board, right? So we've seen some really large investments take place between Dubai and Africa. So for example, the DP World acquisition of Imperial, you would have seen DP World has also recently been granted the concession in Tanzania to operate the port, and there's been various other investments, not just by government-related organizations like DP World, but also in terms of private businesses and their investment activities in Africa. So going back to my earlier point, given the access that Dubai-based companies have to the capital base that's here in Dubai, opportunities are certainly amazing in Africa, and many of the Dubai-based companies are looking for these opportunities and to take advantage of these opportunities. So foreign direct investment is certainly a very important theme, particularly in the infrastructure space, in fact. So we've seen a huge amount of interest in renewable energy opportunities in Southern Africa, South Africa in particular, but also elsewhere around the continent.
That perhaps would speak to trying to close the gap in which 600 million or so Africans still don't have access to sufficient and reliable power. But I also want to talk to you about what you are seeing in terms of how these transactions are being financed. It's specifically a question around currency, dollarization, and whether you are seeing a shift towards settlements more in local currency and a desire to do so to reduce input costs. What is happening internally within Absa? How are you responding perhaps to what clients are saying about that, and how are you thinking about moving forward?
Look, I think the challenges around currency risk and availability of dollars is an ongoing challenge, and we've seen that across many markets in Africa. And I think that is certainly something that is quite structural in nature. So, for example, if a country does not have a high volume of exports, right, its access to hard currency is therefore quite limited. And for the importers into that country to pay for goods and services in hard currency becomes hugely problematic. I think it's as I said, it's an ongoing issue. It's actually holding back a lot of trade and investment activities, and it is difficult even for a commercial bank to solution around dollar availability. Where we can help is trying to match importers and exporters, try to assist in terms of making liquidity available as and when it arises. And certainly one of the areas that we as ABSA are focused on is providing local currency financing to international companies that want to trade or invest in Africa. And that helps to some extent to ensure there's availability of liquidity, but also to ensure that many of the opportunities actually have some funding solutions.
Just as we wrap, pigging back on the question or this point around challenges, because right now also come January we're seeing the inclusion of the UAE and other members in the BRICS cluster, giving rise to even further opportunity of doing more business in the continent, perhaps opportunity for a bank like yourself as well. But what are the major risks in your view to the outlook of realizing some of the targeted growth plans for all stakeholders involved?
So look, I think investors typically look for stability, and they want the ability to plan ahead, right? So if it's large infrastructure type investments, you are probably looking at 7 to 15 year type of time horizons, especially if you are going to look at raising financing for some of these infrastructure opportunities. So stability in terms of the political environment, but also the economic environment, is incredibly important. Access to capital to realize some of these opportunities is certainly an ongoing challenge in many instances, but it's also, what we're finding is that there are greater opportunities to access different pools of liquidity and capital to solution these requirements. So certainly, I think with UAE now being part of the BRICS Plus framework, it's demonstrating, I think not just amongst the BRICS Plus network, but also in terms of Africa's relevance to the UAE and taking advantage of many of the opportunities that come about.
Okay, well, we look forward to being on the front lines of those opportunities as they are announced and made public. But Pramesh, we'll leave it there for now. So thank you.
That's Fifi Peters speaking to Pramesh Naidu, Managing Director for the Middle East and Asia at ABSA Bank. And they are in Dubai, where that summit is taking place. And that wraps up today's Power Table.
This program is in partnership with NetBank Commercial Banking, a banking partner that thinks bigger to guide your business growth.